Hello, and welcome to the video. In today's video, we will be discussing about arbitrage, which is a very exciting and effective way to make money from market inefficiencies. The essence of arbitrage is to take advantage of the differences in prices between markets. For example, if a product is cheaper in one place than another, we can buy it where it is cheaper and sell it where it is more expensive. This way we can make a profit. Arbitrage can be applied in many different markets, not just in physical goods, but also in financial markets such as stocks, currencies, and derivatives. For example, a stock may be trading at a lower price on one stock exchange than another, and an investor can take advantage of this price discrepancy by buying the stock on the exchange where it is cheaper, and then selling it on the exchange where it is more expensive. Another example is currency arbitrage, where an investor can take advantage of differences in currency exchange rates by buying a currency at a lower rate, and then selling it at a higher rate. Example 1, a product like iPhone is available in the USA for $800, while in China for $700. If someone buys the product in China and sells it in the USA, they will make a profit of $100. Example 2, there are also opportunities for arbitrage in the cryptocurrency market. For example, if the price of Bitcoin is lower on one cryptocurrency exchange than another, we can buy it where it is cheaper and sell it where it is more expensive. It's important to note that arbitrage opportunities are often short-lived and require quick decision-making and execution. It's also important to consider transaction costs, such as brokerage fees and taxes, which can eat into profits. Additionally, some markets may have regulations that limit or prohibit certain types of arbitrage, so it's important to be aware of and comply with these regulations. Arbitrage can be very profitable, but it is important to have a good understanding of the markets and products we are working with, and to keep an eye on the prices to find opportunities. It is also important to have a good risk management strategy in place, as the markets can be highly unpredictable. We hope you enjoyed the video and have a better understanding of how to make money from market inefficiencies through arbitrage.